I'm Charlotte McLeod with the Investing News Network, and here today with me is Gareth Soloway, Chief Market Strategist at InTheMoneyStocks.com. Thank you so much for being here online with me once again.
Thank you so much for having me, Charlotte. It's great to be back.
Of course, and we're speaking just about a week after the latest US Federal Reserve meeting, so I thought we could start there. First question for you. What did you make of that meeting? Were there any surprises for you? How did you feel coming out of it?
Well, I think the biggest surprise was the kind of the whippy nature of the yields. The 10-year yield initially spiked higher after the comments, which were much more hawkish, I think, than the market expected. And then we saw them reverse back down afterwards, as I think they kind of think that the Fed is still going to take a long time to act on raising rates. So it kind of created this whippy situation where we saw a lot of things like gold swing lower and other things out there, including the market freaking out just a bit as well. But it certainly was kind of an interesting little tweak to the Fed statement in terms of saying inflation was bigger than they expected, but they continue to say it's transitory. And I think that's what the market's queuing off of in recent days with the rally back up, is that they still think it's transitory.
And is that, like you mentioned, gold just briefly there? The gold price did have kind of a negative reaction to that meeting. We're right now on June 22nd below 1800, which is where we went after the meeting happened. So, yeah, maybe you can talk a little bit more about what's happening with gold there.
Yeah, let's take a look at the GLD chart here. I think that'll be really helpful for people. So GLD is the ETF that tracks gold. And what you can see is we were in this nice uptrend here, and then kind of we're starting to trade a little bit lower. And then here was the big dip after the Fed comments and what the yields did. In my opinion, this was kind of a due pullback. I think it was accelerated on the downside because of some kind of over leveraged positions. You had the initial reaction on the Fed day, which was right here, and then it followed up with some positions that were probably over leveraged on margin that needed to be taken care of. I do look at this as a good technical retrace. It's actually a 618 Fibonacci retrace down to this level. So if you take this low to this high, this is a 618 Fibonacci retrace to technical, and that's a technical support level. So what I did, I actually started to accumulate some gold down in this area. I picked up some GDX, some NEM, which is Newmont Mining, some GLD here as well. And I'm positioning for higher gold prices down the line. I look at this dip as a buying opportunity. I think it was kind of a flush out of the weaker hands for gold. And I still look at the fundamental story that is, the printing of money continues. With the debt in the US, it's not going to go away. They're going to continue to have to devalue the dollar to pay for the debt. And therefore, the long term of gold is very, very bullish.
Right. And I remember the last time we spoke, you gave us what you called a beautiful price target for gold, which I believe was 2860. I want to go a little bit deeper into that. I'm not sure if you gave us a time frame for that. So I want to ask the time frame, and then assuming that that's a further out kind of target, what are we looking at for this year for gold, in your opinion?
Yeah, so yes, so the time frame is about 2 to 3 years for that target. So from current levels, you're looking at over 50% upside in 2 to 3 years on gold, which is actually really a big move on gold if you think about it in historical terms. The way I arrived at that target for the time frame is looking at the last time we broke a major technical high. It took about 2 to 3 years for us to then top out or spike higher to the next major high pivot. So I'm basically just using historical reference for how long that should take. It might be quicker because the printing of money has accelerated dramatically, but I'd rather err on the side of caution and give that 2 to 3 year time frame.
Right. And then so for this year, what might we be looking at for the gold price, especially as we head into summer? I know people have high expectations after what we saw last summer.
So I'm looking at a potential for about a $2,100 end of year price target on gold. So I do think we trade up back to the highs from kind of 2020 and look to potentially even touch those or break them slightly. And then that's probably a good end of year target. So I do think, again, like I said, buying in this range is a good opportunity. I didn't position myself with a full position. I always like to kind of dip my toe in the water, and then if it goes a little lower, I buy a little bit more. As long as my long-term thesis holds up, that's the way I'll trade it.
Okay, and just one more point, I think, on gold. We had a really great response to the last interview that we did about a month ago. One criticism that I found in the comments was that I did not push you hard enough on your bearish thesis for gold. I think that some of the things you talked about were, if money printing stops, that's unlikely. If they get debt under control, that's unlikely. If we start to look into outer space or something like that
Yeah.
for gold, and we find that. So what do you make of that comment? What do you think? It's interesting to me that people really want to hear that negative case.
Yeah, I mean, that's awesome because I think as investors go, too many investors just focus on the bullish case for whether it's a stock or if it's a commodity or even crypto. They always just focus on the bullish, and you always want to be aware of the negatives. So I think again, you have to look at there's always a chance that gold starts to break down. I think if Bitcoin really started to develop into a global currency where crypto starts to take over that alternate to fiat currencies, that would be a negative as well. For me, that's something that's going to take a long time. I'm obviously a long-term Bitcoin bull, even though I still think it's going to go lower in the next 3 to 6 months. But I think that would be another negative case. Like I said, with Elon Musk going into space, and eventually there's going to be in the next 50 years probably mining of gold on asteroids, and there's probably a ton of it out there. So I mean, that's really down the road. Probably none of us have to think about that in our near-term lives. But aside from that, it's really hard to come up with that bearish side to the gold trade. Um, you look at what the Federal Reserve banks around the world are doing. They're all buying more gold up. We've seen the Russia central bank buying up more gold. Even many of the other central banks, including China, have really been accumulating a lot of gold. And it's almost like they're the ones that are printing the money. So you have to say, okay, well, if they're buying gold, what does that signal? What do they know? And they obviously hold the reins to printing of money. So it's good to see that people are curious about that bear case. For me, it's hard to come by, but there are some possibilities.
Right. Well, thanks for going into that in a little bit more detail. I know from some of what you've been saying online, on Twitter and other locations, that you do see a potential 10% correction coming in the S&P 500. So maybe we can go over what's going on there, what you're seeing in the charts that make you think that could be a possibility.
Yeah, let's take a look here. So we saw that breakdown below this key trend line here, and that was a major breakdown that I was watching. Now, when I look at breakdowns, it's not as simple as just breaking below a trend line, right? So in the history of my trading, which is over 20 years, I've seen many times where stocks will dip below key trend lines and then they get ripped right back up. And it looks like that might be happening here, in which case, if we close back above the trend line, we go back on what I would call a watch for the correction to begin. So when it broke below here, there was a possibility it would start. What I would need to see is a confirmation signal. And the confirmation signal basically is a signal I watch, which is a secondary close below. So think about it like this, right? So institutions know that investors are watching key levels. And in fact, we saw this on Bitcoin. Hopefully, we can touch on this next. But in this case, institutions will close a chart below a level, knowing that people will get very, very bearish, thinking it's going to break down. They get on the wrong side of the trade and then they rip it in the other direction, which enables them to pocket tons and tons of money as all those shorts that jumped on board there end up having to cover for a loss. And it looks like that might be in the short term what happened here on the spiders, where we broke below and then we kind of got ripped back above with no confirmation signal. And again, the confirmation signal is a beautiful thing because it basically confirms that it's not an institutional game. And maybe in a future interview, I can actually go a little bit more in depth in what the confirmation signal is, how to spot it, and ultimately how to know if it's a true breakdown or a fake out by the institutions. But right now, if we're back above this trend line, which we currently are on the spiders here, then that puts us back in a holding pattern, waiting for the next break, in which case we'll look for confirmation again.
All right. And so for you, as you wait for this, are you adjusting your trading, your portfolio? How are you looking at this? Or are you just waiting still?
Yeah, so I definitely have exposure on the indices to the short side. I have some QID, which I'm long QID. It's short the QQQ double two times. I have some short on the S&P. So I kind of have spread my money out where I'm short the indices and a few individual stocks that I think are toppy. But then I also have long exposure through names that I look at as being oversold already, where if the markets do collapse, they're not going to get punished very much. And I think that there is value there over the next 3 to 6 months. So, for instance, I think I've talked to you about Viacom before. VIAC is the symbol on that one. I'll show my chart on that one so people can kind of get a sense of it. And you can see, again, this was that big collapse on the Archegos Capital debacle. And then basically it's just been sitting down and going sideways for a long period of time here. But you're at valuation levels where if the market's corrected, this is trading at basically a 9 PE. It's like, how much downside is there? Yes, of course, there would be some if the markets really got crushed. But again, it's probably limited. It's not like a high flying tech stock that's trading at a crazy valuation. And then on the other side, I'm also accumulating some of these Chinese stocks. I've picked up some of this YY. If you look at this chart, these type of charts where they had these crazy runs and have been in these steep downtrends, I'm starting to inch into them a little bit. You can see the YY, which is Joy, is up a little bit today. Other names would be, good quality names like Alibaba. That one's had quite the sell-off. Baidu, BIDU, same kind of thing. So these are a few of my long names, and you can see Baidu's up a little bit today as well. But again, I think that's the key is you want to kind of position yourself where if the indices do sell off, you make money, but then also you have exposure that if the market stays strong, these beaten down names could outperform the market. If the market falls, they won't necessarily get hammered quite as much.
Right. And one more question on this before we move on to the next topic. So, you're obviously somebody who's very agile in the markets. For investors who may be a little bit less attentive to what's going on a very day-to-day basis, would you have a different recommendation on how to handle this potential upcoming correction?
Yeah, I mean, I think if you can't pay attention to your portfolio, at least a few times a week, you definitely want to have some cash on the sidelines. And you could still have some
Mhm.
long exposure because we obviously don't know when the market will specifically correct. But I would definitely have some cash on hand because when that dip does come, if it's 10% or 20%, you want to be able to buy. The worst thing is to be exposed fully long and then all of a sudden you're down 20, 30% on your portfolio and you can't add to those quality positions. So I do think, again, you would want to think about that. I think having some gold exposure would be smart at this point. And like I said, some of these quality names where they're beaten down already, to have small positions in those going into a potential correction would be okay as well.
Okay, and now finally, I will let you move over to Bitcoin and let you take us through what's going on there. I was watching one of your other recent interviews, and you made a comment that I thought was really interesting about kind of the transition of money between cryptocurrencies and the meme stocks. So that seems really interesting to me. Maybe we could start there, and then you can give us your additional thoughts on what's going on in Bitcoin.
Yeah, so that was something that I noticed over the last few months is just as Bitcoin kind of topped out over the last couple months at 65,000 and started to roll over, we saw the meme stocks start to pick up momentum to the upside and really get a bid. And what that told me was that people were pulling money out of the Doge coins, the Ethers, the Bitcoins, and they were saying, okay, well, where's the next place we can go to run it? And it also tells us that the same investors that are in the meme stocks are probably the ones that are trading the Doge coins as well. Obviously, Bitcoin has a lot of big money in it as well, institutional money now. We know MicroStrategy has a huge position in Bitcoin at this point. Tesla has a smaller position as well. But definitely that's rotation of capital. What kind of was interesting today is that we were seeing some of the meme stocks sell off even with Bitcoin. And then when Bitcoin bounced off of the lows, those meme stocks kind of bounced as well, which I thought was really kind of a little change in character there. And it made me wonder, were people starting to get scared about the meme stocks and the crypto, and they were both exiting? And then when Bitcoin kind of stabilized, people said, oh, okay, the end isn't right here. We're not seeing an epic collapse in these two sectors, and they kind of went back in on the AMCs of the world. So really fascinating what's going on right now. And it's even keeping me on my toes in terms of guessing back and forth.
Yeah, and One other thing that I wanted to ask you, we've had this year this influx of investors who are interested in the meme stocks, in cryptocurrencies. Has that affected how you look at the market or the trades that you're making? Is there any way, just in a kind of a global look, that it's impacted you?
Well, it certainly has impacted me in certain ways. I would say the biggest one is that if I ever saw a stock go up 100% on really no news whatsoever, years ago or even a year ago, I would have been so on top of shorting it at a key technical level. And now I really stay back. Even when I'm trading with my traders in the trading room that I have, it's been a situation where we'll see these things running up, and you'll hit a technical level and I'll say, wait a minute, this was a stock that was on Reddit in January and February and ran. Let's not jump in on the short side to try to make some easy money on a pullback. And that's actually served us very, very well to be more cautious in that respect. So and I'm sure this is institutional wise, the institutions overall, you have to be careful. You can't go willy nilly and short these things too early on. Now, eventually, you can start to see the money flow even out, the sellers and buyers start to even out, and that'll give you a little bit of a perception of a top. But it's definitely been a change for me in terms of being more careful picking the shorting levels.
Right. And as we wrap up, we've had your price targets for gold this year. What are you looking at for Bitcoin?
Yeah, so let's talk about Bitcoin here and just quickly go over the chart. I think everyone will probably be very intrigued by this. So if you remember what I talked about on the spiders, the same thing kind of happened today where I had so many people tweeting at me when we broke below the low pivot here of 30,000. Is this the signal that's telling us it's going to 20,000, which has been my call. I said, listen, if you get below 30,000, but the caveat is you have a daily close below 30,000 and you confirm, then it's a no-brainer, straight shot down to probably around 20,000, maybe around 18,000. And what you saw today was Bitcoin trade below that level here of 30,000. And then people were freaking out, probably a lot of people getting stopped out of their long positions. And then it was ripped right back up. And this goes back to what I was saying about the institutional games. You have to really look for that confirming signal that it's a true breakdown and not get too wired when something pierces a low pivot, because they can easily rally it right back up. And that really happens. So on a technical sense, you would say, yes, you pierced the low, but no daily close, no confirmation. Therefore, this 30,000 low actually held today, and Bitcoin can still trade choppy, maybe even up over the next few weeks. Now, the overall chart is no doubt bearish, right? I mean, this is a bear flag. You can even make a case for a head and shoulders pattern right here, shoulder, head and shoulders. Eventually, it will break. We will get into a point where capital starts to run from all markets when the US stock market really starts to drop at some point, whether it's on the Fed or something else, I'm not sure. But at that point, you will see a move down, and you should go probably down to this gap fill here, which is just below 20,000. It also happens to be the high pivot from 2017. So a kind of a retrace to what we would call the scene of the crime level there of that previous breakout.
All right. And I guess, would that be a level that you would be then buying at?
Oh yeah, yeah, for sure.
Yes.
So as while I'm bearish on Bitcoin and the price action, and ultimately think it's going lower, my longer term horizon is very, very bullish for Bitcoin. It even makes me bullish that China's trying to crack down on it. You have these type of scenarios where every week or two it seems like China's cracking down more and more. And what it shows you is that Bitcoin has real, tracking power. It has real of the ability to become something major in terms of, in my opinion, the future gold kind of reserve currency. And China doesn't want that. China wants the digital yuan to be the reserve currency of the world. Whether it's 10 years from now or whenever, I don't know. But that shows you something, that it's a real thing and it has staying power. And I think, again, your long term, even in a couple years from now, you could be at 100,000 or more on Bitcoin.
Well, and any ideas on how that situation plays out in China? I know it's early days, but any thoughts that you have?
Yeah, I mean, that's going to be, that's going to be an interesting way to or thing to kind of monitor. China can do what
Mhm.
they want. we've seen them kind of just come in here and say, hey, we don't want this, so we're just going to ban it. And we're going to penalize anyone who's investing in it in China. They have that power. I think you kind of have to exclude China from the game plan of Bitcoin for now. As it becomes more mainstream in other major developed countries, I think eventually China will have to say, okay, we need to be part of this. And eventually those kind of restrictions will be lifted. But I also think that the digital yuan has a chance to be the reserve currency. Like when I talk about Bitcoin, I don't really think of Bitcoin as the future reserve currency. For me, it's a storage of safety against the printing of money. The digital yuan is going to be controlled by China. They can print as much as they want. So there's two different things here. You have the digital gold, which is scarcity, right? And it's a way to avoid these fiat currencies. And then you have a potential currency like the digital yuan that can still exist. So I think they can exist hand in hand, and it wouldn't shock me to see the digital yuan be the future reserve currency of the world with Bitcoin existing at the same time.
Really interesting stuff. Is there anything else you would add for investors as we wrap up for things to watch in this current environment?
I think for the most part, just be don't get caught up in any of the hypes, especially when you see certain stocks or current cryptocurrencies running crazy. Remember that money can go away very quickly, and things can collapse very quickly. And usually, when things are being hyped, it is the end of the run versus the beginning. If you're paying up significantly, that's never a good thing. Remember, there's always another trade coming around the corner. I've never been in a trade and been like, oh, that was the last trade I ever had in my life. So if you miss one opportunity, there's always another great one coming. Always try to be one of the first in the trade versus the last.
I think that's great advice to end on. Thank you so much for being here today. Once again, it was great to have you.
Thanks, Charlotte. It was great to be here.
All right. And once again, I'm Charlotte McLeod with the Investing News Network, and this is Gareth Soloway.